whenever the property manager knew that we weren't going with them, they left, or they basically stopped. And then we were up to 7 vacancies. Then a unit caught fire. So Fannie said, we're out, right? So then after that, we had to adapt again, get a bridge loan, which we did. And by the time we closed, we had 10 vacancies. So adversity, you just got to stay in the fight, as we say, and keep adapting and look for that mission success.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Brock Mergist is a retired Green Beret who created a multifamily investing business for his family. He's in this industry to change the norms and disrupt how things are done. Brock, welcome to the show.
Thanks, Sam. Appreciate you and appreciate you inviting me on.
Absolutely, Brock. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Well, I started a couple years ago, created the business called Aquila Multifamily. We're looking to be main sponsors and operators. We finally got our first main sponsor deal in December, and now we're actively on a 65 unit multifamily deal in Charlotte, where we're actively raising right now.
Got it. Okay, cool. So you started in this business a couple years ago, and you got your first deal across the finish line in December. Is that right?
That's the first main sponsor. We raised capital on a 384 deal in Florida, and that went full cycle. So we raised it in about 14 months or so. We basically flipped it and then cashed out last year, and then took that. All our investors, except a couple, came with us on this deal in Fayetteville, the 56 unit in Fayetteville in December.
Got it. Okay, cool. You know, one of the things I love about where you are in this business, Brock, is that the struggle and the challenges of getting a business like this off the ground are very, very probably you're just in it. I mean, you're in it getting one of these businesses ramped up. And I think, you know, it's great to hear from hey, we own, 15,000 units, and that's great, people, because they've got a lot of industry experience that they can kind of draw back on, but they forget about maybe the struggles of the early days. So tell us, what are some things really, some challenges you faced in getting this business launched, and then maybe how have you overcome those?
Yeah. So for me, I am 44 years old, and I did 20 years of honorable service in the military, where I did 13 combat deployments. And I think the military, especially SOF specific, has taught us a valuable business lessons. We know how to plan a mission. We know how to plan contingencies. We know how to adapt when we're on the ground and things change. And then because of that, I think when I got into business, I think I can easily adapt. So although I'm new in this industry, I like to tell people when I meet them, because they always like to throw that, oh, you've only been a main sponsor once or twice. But I've done combat operations, risked my life, my men's life, all over the world. With that helped me build to the point where I am now. And I think there is some crossover during mission planning and how to successfully create a mission plan and execute it. Same thing in business world.
Oh man, and you were planning and executing missions, I mean, under extreme duress.
That's
so
right.
It would seem like this is small potatoes. You're not getting shot at when you are planning a multifamily, at least maybe unless you come to Memphis, planning on buying multifamily. So, talk to us about that a little bit and how you built out that kind of plan ahead of time.
Yeah, I think things move a lot slower in this industry, right? So when we go, the wheels hit the deck, and you have to make split-second decisions. AK-47 is over 3,000 feet per second. You have to make decisions fast on the data you got. The industry, the multifamily industry is the same way, but the data comes in a lot slower. It may take 2 or 3 days, maybe a couple weeks to get this. And I think it's all about how you mitigate risk. For me, the risk in multifamily is high because you never want to lose money, right? That is, to me, mission success is never lose money. So, but if you make a mistake, no one dies. So I think it's all about where your risk mitigation. And I always like to plan contingencies, adapt when things happen on the ground, you have to adapt. Our first deal, we ran into everything. We started with an assumable loan, but the property was failing so bad that the same bank that had the loan didn't give us the supplemental. So we lost the deal. Then we had to come back and we had to adapt, find another loan. Then Fannie, we got a Fannie loan, and then they lost that deal. And Fannie walked away because we started with like 2 to 4 vacancies. Then whenever the property manager knew that we weren't going with them, they left, or they basically stopped. And then we were up to 7 vacancies. Then a unit caught fire. So Fannie said, we're out, right? So then after that, we had to adapt again, get a bridge loan, which we did. And by the time we closed, we had 10 vacancies. So adversity, you just got to stay in the fight, as we say, and keep adapting and look for that mission success.
Yeah. And that was, if I'm remembering this correctly, 56 units, or was this the 385?
No, that's the 56 units in December, which actually compounded the issue, right? So mid-December, we closed. December and January is a wash. That's the holidays. Right. So we had 10 vacancies now.
Right.
And then once you take over and we said, hey, there's a new sheriff in town, no more late payments. This is how it's going to be. We had 8 runners. So now we had 18 vacancies. Oh. But it's a huge success story, right? Because we always adapt. You continue to stay in the fight. You continue to push. Well, it took us a little bit longer than a quarter. So last month, we're now down to 4 vacancies. Wow. So it took us a little bit of time, but we rushed and we pushed and we continue to push. But that's a good success story for us, as a pretty young in the business.
Yeah, no, I think that's great. That's great. Yeah, 18 out of 56. I don't know what the math on that is. That's 30%.
Not good.
Yeah, maybe 30% vacant. That's not good. But yeah, you turned it around. I mean, you get, like you said, you stayed in the fight. You turned around and said, "Hey, we just got to keep this moving forward." What were some of the things, maybe some of the fears, or the if there were any fears or doubts? Did any of that creep in the middle of that process? Yeah,
there's always fears, right? Especially once we closed and we had the 10 vacancies, right? So we're fighting uphill. If you know tactics, you don't want to fight uphill. That's just, you want the high ground. So that right there, it did kind of, some fear started creeping in, but we built the right team, right? When we interviewed our property manager, they came highly, what do you call it? What's the word?
Recommended?
Yeah, thank you. They came recommended from some guys that we work with. They're actually former Air Force dudes. So they came highly recommended. He retired out of Fort Bragg area. We were military. We told him what our game plan was, how we wanted to push rents, how we wanted to push other income. He was on board from day one. And he stepped on the throttle, and then we did it together. So I think it's about building the right team, believing in each other, and just staying in the fight.
Yeah, absolutely. Absolutely. Operations is one side of this business. The other side of this business, of course, is really the investor relations, capital raise, marketing side of this business. How are you solving that side of it?
So for this deal, what we do, we partner with capital raisers. I love underwriting and building the plan, underwriting and acquisitions. I like to walk the property. I like to underwrite them. I didn't think I would, but I do. I really do like that. I like to build the plan and then operate. So what I'm not good at is I'm not very good at talking about it or outgoing. So capital raising is tough for me. Now I do work hard at it because I want to, whatever I'm weak at, I try to improve. But so I partner with capital raisers. I let them sharpshoot my underwriting and my business plan because I want them to be comfortable. And then and then we start building those relationships for future.
No, that's very, very cool. And that's a challenging, it's a challenging time, I think, for people in the capital raising space. What are some things as you're partnering with other capital raisers coming into your deal? What are some common objections maybe that you've had to overcome?
So right now, everyone's kind of scared of where the markets are, right? And I get it, and I tell them that. And I think some people, right, there's two kind of camps right now. Some people have stopped everything. They're not buying. They're just like, I want to see what happens. Then there's other people who are still buying. I'm in the camp that still buys. I think education is one thing, right? So I read two like market cycle books. I think it was what Mark. God, of course I forgot. I'll send you that after so we can tell your guys. It was a Ray Dalio, The Big Market Cycles, and it was another something Marks, Steve Marks or
Howard
something.
Marks, Mastering the Market Cycle by Howard Marks.
That's it.
Yeah.
So right, so it's just education thing, right? Just continue to watch the markets. But I think you can make what I've learned from those books and just education is you can make money in any market cycle. You just have to buy correctly. And again, it's risk mitigation. Don't be afraid to step in there, plan contingencies, and be ready to adapt when something does happen.
Right. Yeah, no, that's great. Yeah, I really, really enjoy Mastering the Market Cycle.
Yeah,
because it tells you. I will stop here for a second, because if you haven't read that book and you're listening to this, go read it, because it gives you. I would say that book is more of an investor psychology book than it is maybe. It's so brilliant because he through
talks about the pendulum, right? And it's an emotional. Right. That's why the markets are so crazy, the stock markets, because people's emotions. If they would just stop being emotional and let the markets self-correct, right? That's what he talks about. And I think that's what it is, right? Emotions, you can't be emotional about it. The numbers are going to work. And if they don't, you walk away. It's like, it doesn't matter how much time, energy, and money you put into it. If it doesn't work, just walk out.
Right. No, I like that. I like that a lot. You've talked about team here quite a bit. I'm sure, in the military, that was a very important part of what you guys did. And it's probably an important part of what you're doing right now. One of the things you're doing to scale is bringing on other capital raisers to help you solve that part of the equation. What are some of the things maybe in the next 12 to 24 months as you look to scale your business? What does that team look like for you? Have you envisioned where you're going? I imagine you have. You've drawn out your mission plan. So what is that?
Yeah, I don't know if you ever read the book Traction by Gino Wilkinson. I'm more of the visionary, right? So when it comes to fine details, that is not me. So where I am in my career, I need KPs to help co-sponsor the deals. Mm-hmm. So what I want to do as we continue to move forward is I want to be able to grow the portfolio so I can be the main sponsor, right?
Yeah.
And then also that's going to help me start hiring people. Right now I'm a one-man show. Yep. But that's why I separate it. I know what I like. I know what I'm good at. Then I go out and build a team, right? Mm-hmm. I think the next step for me is I want to, because I think operations is very important. Location, right? That is always the number one. But right under that, to me, is operations. You can take a great asset and ruin it if you don't operate it correctly.
Right.
And you can take a mediocre asset and operate it better than anyone else, and then you can really achieve great things. So I think I want to get into the property management, right? So that way I can write the way I want to do things, the way I want it. So right now I still have to, hey, here's my business plan, here's the vision. I still have to rely on that third party to push the rents or do the things. We were blessed in Fayetteville. Whenever we sat down with the PM, he immediately was on board and willing to push the rents as high as we wanted. So and it's working out.
Right. Yeah. So one of the things I hear you saying is that you want to build up the property management side of the company, even though you may love your property manager now. You see that as an opportunity for you to bring things in-house and just have greater control over your deals. Is that right?
That's right. Because you can use, or you can manipulate the expenses one way or another if you own the property management company.
What do you mean by that?
So just certain things, like if you have a maintenance guy,
Mhm.
right, he can start painting your property. So that's a third party that you don't have to. Now because right now it's like $500 to do a turn. To me, that is outrageous. Why is it so expensive? And I can't do nothing right now because maybe I'm off-site
Right.
managing and we have to hire a third party. But if you have a maintenance guy, he can do that. That's his job, right? I mean, and those are the little things that you can manipulate with it.
Got it. I hear you. I hear what you're saying there. Yeah, and it cuts both ways, I think. And it's sometimes it's cheaper to outsource, or it's just like, okay, you know what? There's a flat fee. This is what it is. You outsource it because it's not a consistent expense. You don't need that person in house. And then other times it's like, we can't wait to bring people in house because the sooner we can do that, the greater control we have, the more of a consistent product we can put out, and we can decrease expense in doing it.
Yeah.
So you hit that kind of economy of scale.
And again, it's rely on third party, right? I always like my 5, 10 meter, 100-meter target. Right now my 5-meter target, I'm relying on the third party. The 10-meter target is, once I get the property management company, I'm still going to have to rely on some third party.
Yeah.
And then the 100-meter target is, now I'm training my maintenance guys to take care of everything. So everything is in-house. So that's still several years down the way, but that's how I like to look at it.
No, I think that's great. That's great. What are you guys working on? Like, what do you see on the debt front right now? I mean, there's still a lot, what I would say, a lot of interest from, and I'm going to use this term, smaller sponsors, but I don't mean that in a negative way. I mean it in maybe they're not the billion-dollar firms buying a 56-unit property or a 65-unit property, but I still think there's tons of meat on the bone in that space. So, and when we see people continuing to buy in that front, I see a lot of larger firms have gone pencils down, but the smaller assets I think are still trading. What are you guys doing right now to really uncover opportunity in these kind of, say, less than 100-unit multifamily properties?
I always look at the operations, right? I target that. If they're mismanaged, you always target that. And I think that's all the guru books. I don't mean that badly, but all the books that you read about apartments, they always try to tell you that. And I think that is true. If they're managing it incorrectly, that's something that I like to target. Right. But also, I think when you did mention debt, some people are afraid of bridge right now. Again, I'm not afraid of that too much, because as long as you, again, plan for your contingencies, right? If you get kind of a longer interest only 3-4 year bridge, which you can do that, or 3 years 1+1, right? So you initially got a 5-year deal. And I also like to look at, because we did go bridge in December and we're going to go bridge this time, which it doesn't bother me because we're going to do some interest holdback. So our first year will be covered under interest. So those payments, as we're doing our upgrades, we can easily get that. But I think you got to look at what's going to happen in a year or two. It's an election season, right? People thinking like everything's going to hit the ground, but what we've learned in the Great Recession, the government knows they can throw money at it and achieve a soft landing. I'm not saying it's right, but they're going to do that continually until it fails. It's also an election season. No party wants to go under an election with high interest rates, right? So they're going to try to manipulate that system in a way. So in a year and two, right? Because even in 2 years, it may be the Republicans own it or the Democrats win again. What's going to happen? So you got to look at that, because politics play a big role in the debt market. And that, so if you look at it like that, I think I'm not afraid of the bridge loans, because we do have that 3-year term plus 1+1. So we have a 5-year term.
Right. No, that's great. That's great. Brock, thank you for taking the time to come on the show today. I hate to cut this short. I've got a lot more questions for you, but we're unfortunately out of time here. This has been certainly insightful. I love, again, just hearing that story for the person who's and I'm not gonna say you're just starting, but you're early on in your commercial real estate career. And I think it's really great just to get some insight from somebody that's in the thick of it. So thank you for taking the time, certainly, to share that with us. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
Yeah, thanks, Sam. You can email me at brock@aquilamf.com. That's AQUILAMF.com. Or you can look at our website, aquilamultifamily.com.
Perfect. Sounds great. We'll make sure we include all of that there in the show notes. Brock, thank you again for coming on today. It certainly was a blast.
Thanks, man. Appreciate it. Thanks for having me.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.